In this video, I'm going to be talking about the UK stocks that I bought this week. Yep, hello everybody, I'm the Dividend Bloodhound and I'm back with another investing episode. I'm going to talk about two UK stocks that I bought this week on the FTSE 100 and FTSE 250. If that sounds like something you're interested in, then do please smash that like button, consider subscribing to my channel, and I'll see you on the flip side of the intro. Catch you there. Hey again guys, welcome into the video. So I've got two UK stocks to talk to you about today, and the first one that I bought is Tate & Lyle. This company has been in my portfolio for a little while now in a very small position, but I'm starting to try and boost that up because I really love where this company is at, the dividend cover, the dividend yield that it pays. I'm really on board with building that passive income. So let's get in and have a look at just what this company will cost you, what its ticker is, what its dividend cover is, what the yield is, and what its dividend history is. And I'll also do the same with the next stock as well. So let's get in there and let's have a look. Hey guys, so here we are looking at Tate & Lyle PLC's fundamentals. The ticker is TATE, as listed on the FTSE 250, currently down a slight bit, 2.6p at 0.38%, and the current share price is £6.77. Now over the last month it has ticked up a bit. It has a nice healthy yield of 4.37% and volume of 36,000 shares and a market capitalisation of 3.17 billion. Now the performance over the last 5 years or so is up at 17%, but you can see it varies a little bit through from 1 week's performance, so obviously it's down a little bit, down on 3-year performance, down 2%, but overall that compound annual growth rate is growing nicely. If you have a look at some of the financial data we've got here, revenue has grown from 2019 to 2020 to 2.88 billion. Profit before tax of 298 million, an adjusted EPS of 58 plays 52, a PE ratio of 11, which is nice and low, which is exactly what we want to see, an EPS growth of 11. And if we have a look at the recent dividend, the dividend has been sustained through the global pandemic, and you had to be in on the 19th of November to get the pay date, which has just gone on the 6th of the 1st this month. If we hop on over to the dividend max side of things, you can see that there's a nice healthy yield of 4.4%. And the company information is there's 467 million shares in issue, and the dividend cover is 1.7 times over. So a score of 1 would be that the company spends all its income on dividends, which is not very good at all. But that is not the case. It's got enough money to cover that nearly 2 times over, and it's been consistently growing it 3 years in a row. If we hop on over to the annual dividends on the chart here, you can see that it has been growing nicely since 2006 on this chart. It's not an absolute world beater, the percentage growth isn't absolutely enormous, but it is ticking upwards, and that is growing nicely over time. That is exactly what I'm looking for as a dividend investor. Nice, solid, consistent, some would say boring growth, but the growth is there nonetheless. So I'm going to wrap things up there, and then we're going to move on to our next stock. Moving on to our next stock then, our next stock is Instec. I bought 1 share in this company this week, and it is a quality assurance provider ensuring the safety of products, and has done so for well over 100 years. This company has got a phenomenal history. Again, it is perfect for a dividend portfolio, and a growing dividend portfolio at that. So let's get in there, let's have a look, and I'll catch you in there. Here we are then guys, looking at Intertek Group Plc, ticker ITRK, share price of £58 currently approximately, and is up 0.03% today, or 2p. Volume is 22,455 and a dividend yield of 1.82% and a PE ratio of 27 and a market cap of 8.38 billion. As you can see in the chart, Back in March it crashed down to £45 a share, an absolute bargain, but has long since recovered all the way back to what it was before, but then has tailed off slightly in recent weeks and months. So the performance over 5 years is up 116%, which is absolutely insane. And as you can see, over the longer term side of things, on the 3, 2, 1 and 6 month time periods, they're all very good returns, apart from the 1 year, which is 1.79%. But when we factor in the global pandemic into that, that isn't something to be too concerned about at all. Over the last 3 months, 1 month and 1 week, that has tailed off a little bit, but is still massively up overall. If we have a look at the fundamentals, you can see from 2018 to 2019, 2020's results aren't out yet clearly. The company turned over £2.9 billion and reported a before tax profit of 445 million, with a PE ratio of, as mentioned, 27 and EPS growth moving from 3 to 7. Recent dividends, your ex-dividend date for this one was the 17th of the 9th in 2020 and the pay date was in the October, so this one will be coming round again in the near future. If we pop over to the dividend history of this company, you can see that the yield according to Dividend Max is 2.1%, and the chart here on this one looks very, very good as well, apart from 2011 where there was a slight trimming of course, but from 2006 to 2020 that is a nice good looking curve that you've got there, and again is what you're looking for as a dividend investor. If you can see it on the chart here from 06, you've got some really good double digit increases there. A 61% drop in 2011 down to 10 pence a share, but the dividend wasn't cut completely, and then onwards from there it goes up 283% to almost compensate for 2011, and then continues growing right the way up until the present day. These companies are absolutely fantastic, and I plan on adding to them and garnering a significant position in them going forward. I will see you back out on the outside world. Great to see you properly again, guys. So those are my 2 companies for this episode. We have Tate & Lyle and Intertek Group, both fantastic dividend companies with really good solid dividend histories, are consistent, they're not really affected too much by the global pandemic and big shocks to the stock market, and that is exactly what I'm looking for as a dividend investor. Not so much risk in this portfolio. Obviously you guys will need to go forth and do your own research from here. I'm just presenting some good ideas and some of the reasons why I've chosen to invest in these companies. I hope you enjoyed this episode, guys. It's been fantastic to bring it to you, and I will hopefully see you in my next one. Catch you there.